Bitcoin has proven to stand the test of time. As the first cryptocurrency, it has had many ups and downs, but 2023 seems very promising for the coin. With halving around the corner, the token can rally this year. In today's video, we present 3 reasons why 2023 could be a better year for Bitcoin.
Really, you mean it?
Bitcoin and other cryptocurrencies are limping out of a historically bad year in 2022, but the outlook for 2023 is not all doom and gloom. A challenging macroeconomic environment of high inflation, rising interest rates, and recession risks was a significant reason why digital assets fell alongside stocks in 2022. Cracks in the crypto ecosystem, such as the failure of the stablecoin ecosystem Terra and the collapse of exchange FTX, exacerbated losses. However, 2023 appeared to be different and promising for Bitcoin already, as Bitcoin began the year on a high note, gaining nearly 10% in the first 2 weeks of 2023. This push indicates that 2023 will be a good year for Bitcoin and Bitcoin investors. The secret to getting ahead is getting started. Mark Twain. Let us now look at the reasons for this projection.
We good.
To begin, we will talk about the Federal Reserve Bank of the United States hinting at less aggressive rate hikes. While the Fed has already raised interest rates several times, it's easy to see when markets sat up and noticed that the central bank wasn't kidding when it said it was about to tighten monetary policy. Cryptocurrency and many of the riskiest stocks peaked in November 2021. Higher interest rates stifled any sustained gains in the stock and cryptocurrency markets in 2022. Expectations bring either positive or negative sentiment. Later in the video, we will talk about how Bitcoin halving can get the positive sentiment to Bitcoin. Since November 2021 through 2022, stocks, cryptocurrency, and commodities have experienced significant volatility as investors factored in rising interest rates.
He is hawkish as possible, that he's going to do everything, and the Fed is going to do everything they can to get inflation under control. And stocks being up kind of speaks against that.
The year 2023 began with the U.S. Federal Reserve Bank, implying that because inflation rates in the U.S. are slowing, there will be very mild or less aggressive rate hikes. Why is this important to Bitcoin? High inflation leading rising of interest rates by the U.S. Fed has always been harmful to cryptos and Bitcoin. This is because money always flies from cryptos to government bonds due to the high interest rates. If inflation is reducing, the Fed, as stated earlier, will not hike the interest rates aggressively and may even start easing them when inflation goes down aggressively. Anytime this happens, Bitcoin always gains strength and surges accordingly. With this in mind, let's move to the second reason.
Interesting.
We provide complimentary education on what is happening in the crypto ecosystem, which can help your trading to the next level. To ensure that you do not miss any of these videos, please subscribe to the channel and click the bell icon to be notified whenever a new video is posted.
I subscribe to that.
The second reason is the surge in institutional adoption of Bitcoin and the whole crypto market. More institutional investors are investing in Bitcoin as cryptocurrency becomes recognized as a legitimate asset class, with Bitcoin being the largest and most accessible. Because of the failure of the cryptocurrency exchange FTX, there is a greater emphasis on using regulated custodians. The custody revenue opportunity could grow to $8 billion by the end of 2023, up from less than $400 million today. Following FTX, we anticipate an increase in crypto custody penetration among existing investors and a significant rise in custody services in the medium term, driven by increased institutional participation in digital asset markets. Market making is expected to increase as institutional participation grows, as will the demand for liquidity in large cap coins, particularly Bitcoin. Talking of market maker, a market maker is a company that provides liquidity for a particular asset or security. An example can be banks. With this type of development, where regulated custodians are used to holding crypto assets, more institutions will have faith in the crypto market and bring more demand, resulting in more revenue growth because there will be higher demand and fixed supply of Bitcoin. Later in the video, we will discuss how high demand with fixed supply help Bitcoin. Bitcoin, as the crypto market leader, will benefit significantly from this. The institutional investors' adoption of Bitcoin will be a huge step up for Bitcoin. The last reason we will talk about is the Bitcoin halving that will happen in 2024. We must thoroughly understand Bitcoin's supply theory to comprehend its halving. Satoshi Nakamoto, who created Bitcoin, thought scarcity could create value where there had previously been none. The hard cap of 21 million coins is contained within the Bitcoin source code. Block rewards from mining make new Bitcoin. For their efforts in upholding and safeguarding the Bitcoin ledger, miners are rewarded with freshly created Bitcoin. The reward for mining, however, is halved roughly every 4 years, and each halving slows the rate at which new Bitcoin enters the supply.
When Bitcoin started, the reward was set to 50 coins per block. But Nakamoto put into the protocol a rule where every 210,000 blocks, or roughly every 4 years, the reward would be cut in half, and so is named a halving event.
There are now only 2 million Bitcoin left after 19 million have already been mined. A Bitcoin halving occurs every 4 years to prevent the cryptocurrency from losing value.
That there may be other factors involved.
What effect will this have on the price of Bitcoin? According to the laws of supply and demand, dwindling Bitcoin supply should increase demand for Bitcoin, causing the price to rise. Historically, after previous halving events, the price of Bitcoin increased, but not immediately because other factors must be considered. The price of Bitcoin was around $660 at the time of the June 2016 halving. Following the halving, Bitcoin continued to trade horizontally until the end of the month, but then Bitcoin's price shot up to its then all-time high of over $20,000 by the end of the year, a 2,916% increase. Similarly, following the 2020 halving, Bitcoin's price increased from just over $9,000 to over $27,000 by the end of the year, but it did not break $10,000 in the 2 months following the halving. It's also worth noting that other factors influenced Bitcoin's 2020 bull run, most notably increased institutional investment from firms such as MicroStrategy and PayPal's decision to allow its users to buy and hold Bitcoin, as explained in the second reason.
Put it towards crypto.
Conclusion: several factors affect the price of Bitcoin, but looking at these significant factors, 2023 looks promising for Bitcoin. In the video appearing at the top of your screen, we have presented the top 5 Bitcoin predictions for 2023, so do well to check it out.